Good morning, ladies and gentlemen. Welcome to Market Today on Business Today Television. I am Shail Bhatnagar, and we are joining you from New Delhi, where both the political temperature as well as the natural temperature of the city are rising dramatically. Let's start focusing on the markets. This is a truncated week, ladies and gentlemen. May 1st, Wednesday, is a holiday right in the middle of the week. Therefore, a lot of options premium would get squeezed because there is one less day as far as the weekly expiries are concerned. Nevertheless, let's start from the very beginning and try and find out what Nifty's trend is, what are the support levels, what are the major stocks that will be impacted because of earnings that have come up over the weekend, as also what are the earnings in the pipeline. So on 29th of April, ladies and gentlemen, on a fresh Monday, we begin Nifty at about 22,419, where it shut shop on Friday, which was the lowest point of the day. The index, as we all know, had dipped 150 points. Now let's look at the Nifty chart and see what are the kind of cues that are coming in. The trend for the Nifty for at least today is up. That's the positive. We'll start focusing on what will impact these stocks a little later, but this is the daily Nifty chart in front of you, and you see that it has shut shop at 22,419 minus 150 points. The Nifty Gift Nifty is giving an indication of a 75 to 80 point gap up, and should that happen in reality, the Nifty on the Dalal Street will immediately hit a resistance. So it will be a gap up, but then again you'll move into a resistance. More on that a little later, but let's just see what are the trends. So you have strong overseas cues coming in from Wall Street, a very nice bounce observed in the Dow Jones index, as also the Nasdaq, based on very strong earnings that came in from Microsoft, from Google, and a lot of movement on positivity as far as tech shares are concerned on Wall Street. So that's a positive. A gap up on the Nifty, plus gold as well as crude oil futures are absolutely quiet. Remember, they move against equities, so any quietness there, any calmness on gold and crude oil is beneficial for equity bulls. So that's a big positive. The only issue as far as the overseas cues are concerned is the 10-year US yield, which has strengthened a bit, but you know, we'll take it in the stride. So that's the broader structure. Asian markets are also up in some extent, but a strong cue from overseas, plus a bump up on Gift Nifty, followed by a very sharp downturn on Friday, augurs well, at least for opening quotes as far as the Nifty is concerned. Now let's look at the things that will impact not only the index but the broader markets as well. Over the weekend, there were 4 Nifty companies that reported earnings after markets closed on Friday. In sequence, there are ICICI Bank, Maruti, HCL Tech, as also SBI Life, the insurance player. We'll divide these into good and bad. The earnings from ICICI Bank are fabulous. There's been a very strong uptick as you look at profit after tax, which rose 17%, and net interest income that rose 8.1% year on year as far as ICICI Bank was concerned. All gross and net NPAs have calmed down. The net interest margin is fairly decent, so that number is fairly good. But the point is, if you look at ICICI Bank chart, that looks fully priced in. Numbers from Maruti were exceptional if you don't look at the margin, which by the way also improved dramatically. Maruti's fourth quarter saw profit after tax surge 48% and sales rise 19%. We'll discuss all these in greater details. I'm just giving you the broad numbers. HCL Tech was a disappointment. Remember, in any case, domestic IT companies are having a torrid time, and given the complexities of the slowdown in the US, HCL Tech has revised its guidance downwards for the next year of a growth of about 3 to 5% in revenue, from an earlier guidance of an uptick of 5 to 7%. So negative on HCL Tech. SBI Life is fairly decent. So these are the 4 earnings on which Nifty will move, will get impacted. And there is one Nifty company, which is India's largest cement maker, Ultratech, that is going to report earnings today. There are 4 other strong F&O stocks that will come up with earnings. Mid-cap software giant Birlasoft, chemicals giant and soda ash maker Tata Chemicals, Canfin Homes, and top retailer Trent. So two Tata Group companies, Trent and Tata Chemicals, and of course a mid-cap software provider as also a housing finance company. Apart from that, in the broader market, you've had fantastic earnings coming in from Shakti Pumps, CSB Banks, Digvijay Cement and Shriram Finance. That is how the Nifty is structured. Now let's look at the option chain. The Nifty option chain, if the gap up actually materializes, you have a very strong resistance coming in at 22,600, where a lot of very strong call writing has happened. The current open interest at 22,600 option call stands at about 54.81 lakhs, in which there has been a fresh addition of 20.29 lakhs. So if the Nifty on a gap up moves towards 22,550, 22,500, you'll see an immediate resistance stopping that move, and at 22,600 obviously there is a major resistance. Now where are the support levels? A very strong support is seen on 22,350. The open interest on 22,350 put. Remember, bulls buy fresh puts to put in strong support levels. So that is at about 13.71 lakhs in terms of fresh open interest, and about 5.10 lakh additional puts have come into place, thereby concentrating and making this level 22,350 fairly strong. So if the Nifty shuts shop at 22,419, remember, any dip towards 22,350 needs to be purchased, because we remain in a fairly strong bull market, and any move towards 22,500 needs to be sold into. This is the kind of setup that we are looking at as far as today's structure is concerned on the Nifty, and the kind of earnings that we are seeing at this point of time. Mr. Chakri Lokpriya joins us today. He's the managing partner at RSP LLP. That's our main guest today, and a little later Mr. Arun Kejriwal, who's a very well-known market expert, will be joining us. Good morning to you, Chakri. You look so fresh at the start of the week. A very warm welcome to you. How do you see sentiment on the Dalal Street? And then we will drill down into earnings.
Good morning, Shailendra. Thank you so much for having me. Thanks. As long as markets are good, we'll also be fresh, I guess.
Okay. So how do you see sentiment as far as Dalal Street is concerned? Last week, the Nifty broke its 2-week falling trend to rise 0.9% during the week. How is sentiment placed, and what are you looking forward to? Your foreign friends are on a selling spree. Friday was a net sale of about 3,500 crores. It's our local friends that have saved the day. If you look at April net sales from our foreign friends, they are now to the tune of 25,000 crore rupees.
You're absolutely right. Our foreign friends, I guess, will continue to remain on the sidelines or sell as long as the rupee continues to fall versus the dollar. However, thankfully on the domestic side, people have been buyers, and this buying has come largely because of the sentiment remains positive because of the earnings growth that is coming out from the various domestic sectors continues to be very strong. In fact, there is an uptick. If you look at industrial companies, infrastructure companies, defense, airlines, all these, they're actually showing an earnings uptick, earnings upgrade guidance. So I think from that perspective, I think we will continue to have a strong market.
Okay. Chakri, now all the major banks have declared their earnings on the private side. Axis numbers are built in, which were fantastic. ICICI on the previous Saturday, as also HDFC Bank, whose earnings came a week ago. Overall, how do you see the private banking universe in India?
The private banking universe, if you look at Axis Bank and ICICI Bank, their loan growth has slowed. Their NIMs, they have kind of managed their positions, while it was expected the NIMs will moderate going into next year. They manage their positions. The deposit growth has been okay, and their balance sheet continues to remain strong. So against this backdrop, you will have some kind of an earnings upgrade for this year for 25, whereas FY25 remains uncertain whether there's an upgrade or downgrade depending upon when the interest rate cycle in the US peaks out, start cutting rates, and therefore RBI also starts cutting rates. So the private banks have not been helped to a great extent by the loan growth, because majority of it is coming in the capex and infra space, which is PSU domain. So against this backdrop, I think ICICI and Axis is looking okay.
Okay, fair point. And one of the finest rallies, at least, seems to be taking root in Axis Bank, that reported mid last week, and those earnings were really fantastic. No doubt in the mind of many analysts that you'll see a fresh record high coming in on Axis Bank. Mr. Lopriya, what's really interesting is how State Bank of India has started moving ahead of its earnings. A fresh record high, a change in digit, the stock now above 800 rupees. How do you see this banking giant?
I think State Bank of India next up is probably 1,000 rupees or higher in the next few months. Simply because its earnings when was going to be markedly better than what ICICI or Axis has reported. Loan growth is going to look much better than the private counterparts, as well as the balance sheet measures such as the Tier 1 capital, etc. Provisioning will remain extremely strong. Again, and the valuation still are very competitive at about 1.2 times book. So I would still be buyers in SBI Bank.
Okay, so that's a view coming in, strength in Axis and ICICI, and of course SBI looks good ahead of earnings as well. Mr. Lopriya, given the fact that by and large mid-cap earnings have outperformed large caps, and both the mid-cap and the small cap index hit record highs last week, given the capital allocation thought that's going in mind for many large investors such as yours, what are your views in terms of overall parity? Would you pour in more money into mid caps and small caps, or do you still feel large caps are better valued?
I would still continue to look at the broader market and the mid caps. And one thing I think there are 2 or 3 changes from the past. One is the number of the universe of mid-cap universe is significantly far bigger. The number of companies, there are several hundred companies with a valuation of over $1 billion, and the liquidity is good, so which increases our investable universe. And the earnings growth has been quiet for the last 10 years, because of the government push, largely in defense, defense, railways, infra, industrial activity, PLI, and therefore companies which are announcing schemes related to PLI. All those companies are showing, for example, take Schaeffler, industrial bearings, or take defense companies. We can get into sectors later. So because of that, I think we will continue to focus on the mid-cap.
Fair point. Mid caps, despite the valuation issues, as also the sharp gyrations that you see in volatility, have sort of retained investor faith. Both the mid cap index and the small cap index are at record highs, and that is an interesting point when you see the kind of struggles that both the Nifty and the Bank Nifty have to undergo to hit record highs. Mr. Lopriya, just a couple of minutes if you could spend on how do you see US interest rates moving now, given the fact that there is fairly decent strength in the US economy, and that is inhibiting the Fed from cutting rates immediately. What is your guesstimate? Do we see rate cuts by the end of calendar 2024, or is even that pushed back?
Shailendra, the whole story of a jargon of higher for longer is now becoming a reality, simply because of the growth. US Fed unfortunately doesn't seem to have a playbook other than interest rates and inflation. They are not being imaginative enough. So against this backdrop, but there's also a US election coming in November, so which means they will be have to be receptive of that, and therefore cut rates somewhere towards before the end of this year. irrespective of where the the strength of the economy stands. So now you have a combination of the latest readings in the US of slightly lower growth, but and also slightly higher inflation. So a combination of this is actually, keeps them confused. So the export sectors like information technology will continue to remain subdued as far as from the Indian context is concerned. Some of the pharmaceutical names, however, all the domestic companies. So given that, I would continue to stay away from IT as a sector, some of the pharmaceuticals, and focus on the domestic sectors.
Okay, within domestics, Mr. Lokpriya, what catches your attention at this point of time?
I think a strategy of sticking with the winners will continue to be a winning strategy. All these companies, whether it's defense, railways, industrial, capex, automotive companies, auto ancillary companies, they've all done well, and I think will continue to do well. The reason they're continuing to do well is evidence is showing up in the earnings guidance is actually being revised up. And look at the latest trend of companies. And that universe of companies provides you a fairly good diversification of your portfolio across various sectors. And I think so that is where we will continue to invest.
Okay. Any names that you would be comfortable sharing with from the PSU basket within defense, within railways, anything in the private auto ancillary space that catches your attention, sir?
If you look at auto ancillaries, if you look at industrial bearing companies, I think a couple of days ago, Schaeffler, they make bearings, and the bearings has applications not just in the automotive industry, it has applications in industrial, railways, defense. All these various sectors use bearings. And therefore, companies like Schaeffler, Timken, SKF, all these companies will benefit, and because of sector demand coming from different multiple sectors. Now, in the case of defense, Bharat Dynamics, Bharat Electronics, HAL, they've all done phenomenally well, but I think they will continue to do well. And then on the other hand, if you look at, so I think, so these are the companies.
Okay, fair point. Just a note of caution for our viewers. BDL, BEL and Hindustan Aeronautics, given the very, very strong demand coming in from at least all quarters, whether it's retail or institutional, three of them at a record high. As far as bearing companies are concerned, all three the names that Mr. Lokpriya has taken are MNC companies, and while they have appreciated over the last couple of weeks in particular, but all of them remain fairly below their all-time highs, especially Timken India. So these are the kind of companies where you still have value to be had, at least relative value in terms of margin of safety in comparison with price. So the six stocks that have been mentioned are Schaeffler India, SKF and Timken, Bharat Dynamics, BEL and Hindustan Aeronautics. Mr. Lokpriya, anything that catches your fancy within the railway space?
Basically, I'd love to say Jupiter Wagons, but the stock has done so phenomenally well. RVNL
Yes.
is RVNL is again another company which I think will continue to do well. So these are companies, while you should be, I think an investor should be mindful of the fact that they have run up so much phenomenally strong, and they should probably stage out their investments. But they are extremely sound companies, as in good investments for the next couple of years easily.
Yes, as Mr. Lokpriya and everybody else is aware, in a bull market, while we rejoice, the record highs and the way portfolios appreciate the stocks that we own, whenever they rise, we have a good feeling. But whenever you go and buy out a stock, whenever you go out in the market to buy a stock, you look at the relative value of that stock versus 6 months ago, and there is this feeling of missing out. Mr. Lopriya, the pre-open rates are upon us. Let me just pay a little attention to them, and then I'll get back to you immediately. Nearly a flat opening on the Nifty. It's now in the green, 13 points higher, 22,431. Remember, it was giving an indication of a fairly decent start when it comes to indications coming in from the gift Nifty. Let's pay attention to the earnings, boys. I want to see what HCL Tech is doing. Disappointment in earnings, 4% lower, 1415. Remember, HCL Tech cut its guidance down to 3 to 5% growth in revenue versus 5 to 7% earlier. Maruti, margins are an issue, 2.3% lower, 12,400. Let's look at the other stock, SBI Life and ICICI Bank. ICICI Bank 1120, 1.1% higher, and SBI Life, let me just see what SBI Life is doing, 10% higher at 1556. SBI Life reported a 4% increase in profit after tax to 811 crores. Both the value of new business, which was up 5%, and the premium actual earned was up 17%, so the market appreciating that quite a lot. A very quick detour into lots of other earnings companies when it comes to RBL Bank, 3.6% higher, strong earnings, 275. Yes Bank, 7% higher, 28. That's really good. Shriram Finance, 4% higher, 2600 now, and you have a strong move coming in to KFin Technologies. This is not an earnings boy, I'm just marking the price, 3.7% higher. The Nifty, ladies and gentlemen, has now moved up 121 points higher. Let's look at the index heavyweights also, the ones that are appreciating sharply. There's a buying emerging on Bajaj Finance, which was beaten black and blue on Friday. Remember, the earnings were disappointing, but some bounce back and short covering coming in. 1% higher, 6,800 almost. Strength in ICICI Bank, 1124. Now let's look at the three heavyweights. Reliance flat, 1.7 rupees higher, 2906. HDFC Bank, 4 rupees 70 higher, 1514. And Infosys, 5 rupees higher, 1435. So a fairly decent opening. This is exactly what Gift Nifty had suggested. Now the problem is with this 100-point gap up, you see the Nifty moving right into a resistance. So the best that can happen is that all those people who had taken long positions after Friday's dip will be seen squaring them off in early trades. Coming back to Mr. Lopriya, a fairly decent opening, would you say, Chakri, as to how the Nifty is moving now, about 150, 160 points higher, all dips getting purchased in the market?
Indeed, I think the Nifty is looking okay because it's being kind of held in check, given the fact that the IT as a sector has not performed well. That weight is fairly big in the Nifty. And in spite of that, the Nifty's overall valuations are fine. On the other hand, the metals have not yet picked up. Again, they're holding back the earnings growth of Nifty. So I think that way the Nifty is not clearly, is fairly valued, and therefore we continue to be buyers.
Okay, one more stock that I'd like to mark, which is a regulatory instance, a massive accident happening on Bombay Stock Exchange. Initial rates now 20% lower, 2570. There is a move by the regulatory agency, Securities and Exchange Board of India, to increase the revenue share that BSE has on options. It's a bit technical, I'll let you know, but this is something which is a bit bothersome. Remember, the Bombay Stock Exchange has run up very sharply, and a 20-point downtick is a fairly frightful situation. Usha Martin down 5%, 350. Craftsman Automation down 2.9%, 45.49. These are some of the initial prices that we see. Let's look at the most active counters in terms of volume. It's Bombay Stock Exchange down 19%. And of course, earnings boy Yes Bank 28 rupees, Shriram Finance 4% higher, 25.98, as also Power India, erstwhile Hitachi 2% higher, 9,100. Mr. Lokpriya, when you look at distribution and capital allocation these days, is it an increasingly difficult task when it comes to looking at potential buy candidates, given the fact that valuations across the board have multiplied sharply? How do you sort of navigate this?
Well, valuations have expanded. If you take, for example, the number of sectors, if you look at Nifty, IT is held back because of well-known reasons. US is still not strong, therefore valuations are. While the valuations are okay, the earnings growth is not supporting, and therefore we would not be buyers. And in the case of metals, the valuations are fine, waiting for some kind of stability of the US dollar versus rupee and export scenario. So I think, there are enough pockets within which, on the other hand, all these darlings of the market like railways, defense, infra, they are continuing to surprise on the upside in terms of actual delivering of earnings growth. Now, that is the proof of the pudding that that actually the valuations are justifying the earnings growth and the revenue growth of these companies. If you look at a company like NLC, Naval Lignite Corporation, trades at only at about 1.3 times book. So, phenomenal amount of business. So, numerous examples like these. So, therefore, I think we are finding enough pockets.
Fair point. It's one of those facets of life where bull markets are understood in hindsight, and when you look at all dips being purchased and all tops being taken out, you realize that we are sitting in a big one, and one must need to look at buying those dips rather than being afraid of sustained falls. Some stocks I'll again mark. Ireda 9% higher, 187. The counter headed towards its earlier highs. This is a PSU, a government company, which has now become a Navratna, which essentially means that the management has more flexibility when it comes to taking decisions beyond a certain level in terms of project size, as also the kind of projects that it can independently audit as well as sanction when it comes to government oversight. What else is moving? Container Corporation 1.4% higher, 1083, and of course the entire railway pack. Ircon has won an order, therefore 2.8% higher, 258. IRFC 2% higher, 161. You have all sorts of government insurance companies moving up. GREC Ray 347, 1.7% higher. NICAL 2% higher, 250. Chakri, the other sector that catches my interest is the very sharp run up that you've seen in auto stocks. Record highs on Eicher, Maruti as well. It screamed past 13,000 last week. There's no let up in demand as far as Bajaj Auto and Hero Motors are concerned, and a whole host of stocks like Ashok buzzing. What do you think is driving these auto numbers higher?
In a combination of two or three things. One is the domestic demand, that 8 to 10% volume growth will continue to happen for the next couple of years easily. Second, if you look, so that is in terms of passenger vehicles. In terms of commercial vehicles has actually been weak. So we are waiting for the peak of interest rates, the well-known US story of waiting to cut rates. And therefore, whenever that happens, will be a further boost to the commercial vehicle sector. Now with the EV market now increasingly becoming and meaningful, small but meaningful and growing very fast, it's opening up export markets for all the auto companies, and therefore that's a new revenue stream. So given that business momentum is so strong, I think continue to focus to buy on whether it's a TVS Motor or Ashok Leyland or including these bearing companies like Schaeffler, Timken that we discussed about.
Okay, fair point. And of course, the bearings are auto ancillary providers to OEMs. Therefore, bearings also make sense. The ones that you have highlighted are Schaeffler, SKF India, and Timken. Chakri, where do you see, how should I say, value to be had even at these levels of record highs on mid caps and small caps, and a fairly strong strength coming into large caps? Where is value to be had?
I think we should look for growth. India has always been a growth market. So where, the largest company, say in India, the earnings growth and revenue growth is still very strong. If we we have to look at battery companies. You look at Amara Raja. Yeah, Amara Raja is the second, one of the two largest battery companies.
Yes.
And, it will not only benefit from the growth in the auto industry, but will also benefit from the EV, given that Exide is tied up in the EV space. It won't be far too long before Amaraja does something like that. It trades only at about 12 times earnings. So, for a market that's growing so phenomenally fast, I think you have sufficient leeway. So these are the kinds of pockets of value that we're seeing.
Okay. Chakri, I'll also welcome a very dear friend, Mr. Arun Kejriwal. He's been in the market for about 35 years or so and has a very strong grasp on equities. Namaste, Arunji, and a very warm welcome to you, sir, on Market Today. How do you see banks after ICICI's fairly decent numbers, and of course the fabulous performance that Axis Bank had come up mid last week?
Shail, you need to understand two things. We are talking of India, which is going to grow at a macro level, at a micro level, at the MSME level, across sectors. We are talking of a cyclical growth that India is going to witness without the participation of banks. And when I'm talking of banks, I'm not talking of public sector, private sector banks alone, but I'm talking of the entire gamut. They're not growing, they're not performing is like, two sides of the coin. Both have to do well if the economy has to do well. So I believe what you are seeing is just the beginning of the banking revolution all over again. Yes, RBI has been playing a stellar role in highlighting pockets of concern, and some of the big names have also come under the radar time and again.
Fair point. We seem to be in a very strong uptick as far as corporate credit demand is concerned. Anujji, where do you think value resides at the moment in the market?
Are you talking about the banking space or in general?
No, let's broaden the discussion.
Okay. I believe one needs to look at companies with a 3-year horizon. It's most unfortunate that over time we have come down to playing T20 like the IPL season, which is currently on even in the market.
Yes.
And people are expecting to make money within the day. At best, they will stretch their positions to maybe a couple of days. However, there is a lot of money to be made in mid-cap and small-cap sector. But with a note of caution, I would like to add here that you need to do your own homework. Don't rely on just what you hear people like me and some of my other fellow experts talking about it. When they talk about a stock, just don't take it as it is. Do your own homework, because there are a lot of pain points that come while investing in small and mid cap. And one small event can magnify when the company declares its results simply because it has a small balance sheet. So this would again be across sectors, Shail, that you have got value. We have a lot of niche companies that have come into the marketplace over the last couple of years. And while their response during the IPO would have been of a different magnitude, where there was a big flurry, prices went up quite sharply, they have all corrected themselves to more realistic levels. So I believe one needs to do effort in picking up such stocks which can give you 25-30% per annum, and over a 3-year time frame, even more than double.
Right. Arunji and Chakri, please allow me the indulgence of marking the opening rates. I'll just be back with you in a jiffy. Ladies and gentlemen, the Nifty is open subdued in the green, 60 points higher, 22,480 with you. Strong move coming in on Nifty Bank, no doubt driven by ICICI Bank. 200 points higher, 48,400 for you. The IT index is down marginally, 11 points, nothing to be worried about. HCL Tech was a disaster there, and Nifty 500, third of a percent higher, 65 points in the green. Let's now look at the heavyweights. I want to see what ICICI Bank is doing. 6 rupees 50 higher, 11.14. How about Maruti? I want to see what Maruti is doing in terms of gains. Maruti at the moment, let's look at HCL Tech, 3.5% lower, 14.21. And let's now try and find out what Maruti is doing. Third of a percent higher, 12,795. The top gainer on the index, ladies and gentlemen, is SBI Life. Stunning set of numbers, 2.5% higher, 1450 for you. Tech Mahindra, no stopping it. Remember, on Friday this was the top performer on the FNO as well as on the Nifty. Now 2.5% higher, 1310. A very quick draw into what the FNO is doing minus the index heavyweights. The Nifty is flat as flat can be, 60 points higher. Okay, top gainers is Shriram Finance, again earnings led, 1.9% higher, 25.49. You have a strong move coming into Emphasis, 1.7% higher, 23.37. A very quick look at what are the most active counters, led by ICICI Bank, no change in price, 11.15. A very quick look into NSE 500. I want to see what BSC is doing. Okay, 16% lower, 26.83. It's better than the opening quote of 20% lower. The other stock that I want to see is Kotak Bank. Remember, there was a pain point on Kotak as far as the regulatory changes were concerned. Thursday and Friday were bad for Kotak. Now a percent higher, 16.23. So that's how the markets have opened, a fairly quiet uptick in prices. Railways are ticking fairly well. RVNL, which Chakri had pointed out, 296. Union Bank up 153.65. Strong moves coming into IEX, 1.5% higher, 162.30. So it's a flat opening, ladies and gentlemen, but in the green, and that's a plus. Let's go back to our panel. Arun Kejriwal and Chakri Lokpriya joining us from their respective cities. Arunji, coming to you first. Any preferences within the railway pack? Some of them have corrected fairly sharply. How do you see that particular sector, and anything that catches your fancy on the long side?
So I want to sound a note of caution. What we saw in the railway was euphoria. I think February, people, anything connected with railway, tracks, bogie, coaches, etc., just went crazy in this market. Stocks went up 15, 20, 30, 40%. And even a stock like IRFC, which is into arranging funds for the Indian Railways, people started playing that stock and making it rise as if it is a manufacturing company of the railways. This was the kind of madness that one saw in the markets. And believe me when I say this, Shail, that along with IRFC, we had a twin brother for him, that was Irida. These two stocks took the fancy of entire retail investors, and they went crazy. So coming back to the story, where do I see value? I believe there is some more correction which this pack requires, not because of anything else, but these are valuations which are a premium to the market, and there is no justification for this kind of a premium. If these stocks correct on an average between, say, about 15%, give or take a couple of percentage points, I would look at them again. My top picks in this sector would be RVNL, IRCON. These are the two stocks that I would like. As far as IRFC is concerned, I would look at only one parameter, that is price to book. We need to understand it is something that is to be compared with a banking stock. And we know that we can get banks at far better valuations than what a IRFC quotes.
Fair point. Coming to price action again and pure price action, IRIDA is today up 7% again. The company bagging the Navratna status from the government of India. Be that as it may, remember we are price takers as far as the market is concerned on a daily basis, but we are very cautious stock pickers. Chakri, coming to you, a vote of confidence from Arunji as far as your pick RVNL is concerned. It's doing pretty well. How do you see metals? You know, I'm very, very afraid to ask about stocks that have surged dramatically over 15 days. Look at Hind Copper. It was somewhere like 250 about a fortnight ago. Today 400. Ditto Nalco, ditto JSW Steel, Jindal Steel and Power, Hindalco, you name it. Metals have shone beyond expectations. Are they overstretched or are they rising to a plan?
You know, you look at all the metal companies, frontline companies, or even the second line companies, Tata Steel, Hindalco, Hindustan Zinc, all the valuations are very reasonable. You know, they all trade at about 5 to 6 times EV. But for this time of the cycle, you know, it is still very early stage cycle for these companies. And therefore, you know, I think there is sufficient upside. Only thing is the global story is still very uncertain, and that will impact the local domestic valuations as well. Various commodity companies, you know, looking at their companies like Polyplex or Cosmo First. You know, these are companies which are again derived from not come from the commodity cycle. So I think commodities in general are looking okay, attractive valuations. That is.
Okay. Arunji, would you step into the kind of moves that we've seen into metal counters? Anything that catches your fancy still, despite, you know, the blowouts that we are seeing on prices? People like you, me and Chakri, who've spent about 25, 30 years in the market, you in case much more. You know, these vertical charlies on stock prices often sort of put me on the back foot at least. What's your view?
Shail, yes, I would definitely keep some of these stocks in mind because most of the pack that you are referring to have fundamentals. The fact that they are performing companies, they have been in business for quite some time, they have seen the ups and downs, there are commodity plays, there are LME plays. We need to add over time what we have learned, that the retail factor is also a dominating factor. This pack moves in a herd. So you will find retail entering a stock, the stock starts moving, gathers momentum, and boom, one fine day you find it down 15-20% over a span of 3 to 4 days. It may have lost 40-45% in value. When you have these stocks in your radar, these dips give you that opportunity to enter the stock simply because your fundamentals are there, you are aware of what the company is up to, and just because of momentum play, you are getting an opportunity to re-enter the stock. Having said this, what I would reiterate that in a rising market, I would not just jump into the stock because it has done well over the last 5-6 days individually every day.
Okay, fair point. Arunji, staying with you, we had discussed some themes that you would want to invest in before markets actually opened. Now, tell our viewers what is on your radar, whether you're waiting for a dip as far as stock price is concerned, a couple of names which you find interesting at current levels. Maybe there are themes running across your mind, but individual stocks, if any, which are on your radar or which you may have actually purchased over the last 15 days.
So there was a SFB which I was bullish on after a lackluster debut, which the stock did a couple of months back. Jana Small Finance Bank. The issue price, if memory holds me right, was about 418, 419. On debut day, it fell all the way down to about 360. It has now come up quite sharply, about 515, 520. I believe it's doing well currently. There is some more space to go, but you need to ride this share now with caution. Some other stocks that I have liked from the recent 6-month-old listing would include a Sami Hotel, a Park Hotel, where I believe the India story is playing out well. There is some sort of tourism happening, whether you call it business travel, whether you call it family travel. The impact of COVID and the fact that people were stuck for 2.5 years is still playing out in the marketplace.
Fair point. A newly minted hotel stock Park and newly minted small finance bank Jana is what is on Arunji's radar. The market, ladies and gentlemen, is now rapidly moving up. The Nifty has 22,500 with it, so the bulls are prancing on Dalal Street again. 88 points higher. The Nifty Bank now 330 points higher, 48,543. IT in good shape. And of course, the 500 index, which is the broadest measure that we track, is also in the green. Let's also do a bit of screening in terms of all-time highs, ladies and gentlemen. This goes on to show where money is moving in. So no surprises. ICICI Bank, stellar set of earnings, 1.6% higher, 1125. It's rare for a bank of this size and stature, as also for blue chip, to move up after earnings have come in. So you can well imagine as to how demand is setting in. Amongst the high beta low ticket items, I talk about relatively low ticket items. HUDCO 236.35, 3.6% higher. National Aluminium 1.38% higher, 198.50. Colgate Palmolive 28.58. Indigo Container Corporation, Voltas, Jindal Saw and Trent. These are some of the stocks that have hit record highs. Coming to you, Chakri, you've mentioned railways and defense in particular as strong themes even at current level. Anything else in the market, maybe sugar, maybe brown goods makers, given the heat that we are seeing up north, how do you see it at these levels? Maybe Voltas, maybe Havells, maybe Blue Star, if you can add value to these stocks.
Given that it's been a hot summer and going to be a hot summer rather, and also that Voltas has underperformed over the last 2-3 years. It had lost market share to its competitors. Now there are signs that it is beginning to take market shares. The volumes are coming back, as well as helped by a strong summer, and therefore I would be a buyer of Voltas. And also given the summer travel, and we're just talking about hotels, so which means companies like VIP industries, you need luggages to go on a holiday, and they have luggages across price points, suitcases across price points, and it's again a value company because it has underperformed for a long time. There's been a company rejig in terms of its refocus, and I think that company is looking good. So I think these are the various pockets and again, Park Hotels is also looking good because it has 30 properties spread across India, some lease, some own, priced below the Taj group of hotels. But is at a very attractive price point for the upper mid-income consumer whose income trends have been very strong.
Okay. Anandji, I wanted to ask both you and Chakri a basic question on, national elections. The first two rounds are over, 120 plus 88 seats, which is roughly 200 seats out of 254, are now in the ballot. And nearly about, 45% of total seats have now been voted upon. The kind of enthusiasm that we saw about 15 days ago seems to be markedly absent, and a lot of market participants are also worried as they were expecting, huge turnouts. Arunji, to you first. How do you see this?
Let's understand the turnout also depends on the weather. If you have temperatures which are in excess of 40 degrees, you do have an impact on voting patterns. Uh, Over time, the election commission has extended the voting hours uh, so that early morning people can also go and vote until late evening when temperatures cool off slightly. This happens. But let's understand if we get anything between 65, around 65% voting at a national level, it's a decent number. One shouldn't have too much to complain.
Yes.
What would be important are first time voters, what their number is, because they are the ones who typically, pardon my saying so, but typically the ones who make the most noise about what kind of people they want to be elected, etc. So their participating in election is important because unless they vote, they don't have the right to criticize. Uh, to your earlier question, which you had asked, Chakri, I just wanted to add in the air conditioning space, some of these contract manufacturers also need to be looked at. I believe there is value there, even though manufacturing by the OEMs is being stepped up, but their dependence on contract manufacturers cannot just be taken up.
Fair point. That's something of a value add coming into the brown goods makers. Chakri, how do you see this conundrum that markets are now facing? Extreme enthusiasm giving way to mild disappointment as far as the election fervor is concerned. What are your foreign friends telling you, or more importantly, what are they asking you?
I think one of the good things about this election is, given that it's spread over such a long time period, that it has kind of allowed a reset of expectations on the outcome of the elections, and that it's giving the market sufficient time to recalibrate itself accordingly. So I think they're still predicting clearly a existing government win. However, I think the market still is working on that assumption. The margin of the win, of course, is a varying figure and probably a bit lower than what it initially was thought of.
Fair point. And these are the ups and downs of life, as also markets and as also politics. I'm sure the ruling dispensation will come out trumps. There is a question mark on the number of seats won, but the overall outcome perhaps remains not in doubt. Arunji, coming to you, there were great expectations from the listing of Jio Finance, and they seem to have been borne out. The counter is at a record high, and a lot of positives have often been attributed to a company, given the market size and the initial lack of business. Do you think the markets are overly enthusiastic, or they have a reason to probably rejoice this record high on Jio Finance?
So it's a catch-22 situation, Shail. It has a fair amount of cash on its books. It generates money from its own cash. what would be the activities that it would concentrate on going forward is still something which is debatable. There were talks that it would become another Bajaj Finance. There were talks that it would get into, a large way of funding buy now, pay later type of schemes through its Reliance Retail, combination of such things that would be done. I'm not sure whether there is clarity, or I have not come across clarity on what would be the key business focus areas for Geo. So yes, it has its treasury, it's earning money on that. We all know Reliance as a group manages its treasury very, very well. So that money is the only thing that Geo is currently showing. I believe 2 quarters down the line, we would have better clarity on this subject. And once that is available, you would see people sort of playing Geo as a company, as the business that it would be getting into.
Okay, ladies and gentlemen, we have the first century on the Nifty, up 100 points, 22,519 for you. The Bank Nifty is up 300 points. Let's look at the pullers and draggers when it comes to the Nifty primarily. I'm sure it's ICICI Bank taking it away. Yes. Out of the 100 points, 33 are contributed by ICICI Bank at a record high. Reliance is contributing 24 points in the green. L&T and TCS roughly 10 and 8, and State Bank of India bringing in 7. What are pulling the index down? HCL Tech, disappointment in earnings. The stock is down 5%, 1398. Apollo Hospitals reacting post the news that has come in, 6% lower. M&M, ITC and Bajaj Auto are the three other laggards. A fairly decent uptick of about 86-90 points on the Nifty. Chakri, getting this question to you. Reliance Jio at current prices, somewhere like 380, 390. Is it a value buy, or is it something which is probably showing a lot of steam, or how should I say, froth?
Jio extremely well capitalized. Jio is an extremely well capitalized company. The management is very good at treasury management. Three, they have also identified enough avenues of growth which have very strong growth characteristics. Reliance as a group has excellent management capabilities and execution capabilities. And in terms of its lending business, I think there are enough avenues out there to grow the book fast as well as responsibly. So if you look at all this, I think I would still be positive on Jio Financial.
Okay, fair point. That's the broader view coming in at a bit of caution from Arunji, who's always a very circumspect investor. He looks at all sorts of pluses and potential, how should I say, pitfalls, and a vote of confidence coming in from Chakri as far as Jio Finance is concerned. Let's look at the markets for a while. We've had the first 15 plus 8, 23 minutes of trade. Let's look at the top performing indices for a moment. We track 19 for you, ladies and gentlemen. Out of 19, 16 indices are in the green, led by the pharma index, 0.7% higher, 19,123. The broader indices in the mid cap and the small cap space are also in the green, although mildly so. NSE 500, the broadest measure, 20,896, up a fourth of a percent. Arunji, there is no let up in demand for ICICI Bank. Earnings were within the grasp of analysts, but given the kind of enthusiasm that you see on the chart, how would you stand?
I'm not quite sure what is it that you would like me to tell you, but let's understand, being bullish on banking is
I would like you to
not only
tell the truth.
right. So, being bullish on banking is well within the flavor of the period. It's what is going to drive the markets. It's what's going to drive the economic growth that the country is talking about. So, I believe it will be led by the market leaders, by the stalwarts of the banking space across segments. So, private banking, public sector banking, your small finance banks, housing finance banks, all of these are going to be in the front line. All of them performing well. I mean, you have to be bullish on banking if you are bullish on the country. This is the state of affairs. Uh, at last, when I had seen the indices, roughly 42, 43% of the Nifty comes from the banking BFSI space. So you have such a dominating presence of one sector in Nifty. So if you want Nifty to go up and banking does not perform, it's just not possible.
Fair point. That's a broader view as to how banking should be moving, and within banking, of course, the private sector space, which has been a relative underperformer over the last 1 year or so, given the sharp rallies that we've seen in the PSU banking sector. Chakri, before we let you go, there was this unbridled enthusiasm for the OMC space, in particular HPCL and BPCL, whether it was the possibility of a potential divestment in BPCL or the very sharp undervaluation of HP. Nevertheless, the stocks ran up fairly sharply. Now, more or less, that enthusiasm has waned. How do you see the OMC structure?
HPCL, BPCL, IOCL, these are all have always been value companies. However, there is always the regulatory uncertainty and the impact it will have on their margins and on their earnings outlook. And the timing of it becomes very difficult as an investor to try and figure out. And so I would, and also given the fact that oil prices have lately moved up quite sharply, I would stay away from the OMCs.
Fair point. And thank you, Chakri, for these wonderful thoughts and seeing you so bright and early on what is turning out to be a fantastic Monday. Thank you so much for your time, and we'll remember the 6 stocks that you've highlighted: Schaeffler India, SKF India, Timken India, all MNC bearing companies, as also the 3 booming defense counters, BDL, BEL and Hindustan Aeronautics. Thank you so much for your time. Coming to you, Arunji, your views as to how the current market is placed in terms of liquidity inflows from retail as well as ultra HNI and HNI participation. The fact that foreigners remain net sellers to huge amounts, and the broader theme that is running in the market is the return of the current political dispensation. Overall, from 35,000 feet, how do you see Indian markets as of now?
So let's look at something that has happened in the market, say over the last 5-6 months. Elections to the 5 states were held. Results to the 5 states were declared in the first week of December. And this present rally has its sharp genesis from the 4th week of November. We have risen close to 13-14% from there. We are now a month and a week, 5 weeks away from results being declared for the general elections. The market belief is that the present dispensation will come back. With how many seats, it still remains a mystery. But I don't think that makes too much of an impact on the broader set of things. As far as inflows of money into the market is concerned, while yes, we have one pocket, the FIIs, who seem to be withdrawing money on a regular basis, domestic inflows led by retail participation, led by SIP investment into mutual funds is at record levels. The number of investors, the amount of money, the monthly inflows, there seems to be no dearth to it. This is supported by the fact that markets have grown phenomenally. 13% in 4 months is something which is commendable. If I just give it a color, in entire FY 22-23, the return was about 5% on the benchmark indices. Last year, we were talking in terms of 25%. And this year, in 5 months, you've got about 13%. So these kind of returns, sustained basis, are quite good, attractive enough to bring in money. And we all know that retail money moves in herds. So if I'm making money and I tell 10 people around me that I've made money, you can bet your money that 8 of those 10 guys would put in money in the market.
Fair point you make, Arunji, that investor psychology is herd based, and they move in packs and they move in fits and starts. Because you've been in the market for so long, let me ask you a rhetorical question. We've seen sustained selling coming in from foreign funds over the last 15 days, and we all know this is skittish money. This is money that's generally very afraid. By any chance, do you think they know more than us when it comes to the kind of potential political potholes that the country might face post June 4th?
No, I don't believe that could be the reason. The fact of the matter is there is concern that the US economy, which seems to be on a complete roll, there was time, couple of months back, when rate cut was driving the US markets. Now, I believe the markets there have also discounted the fact that a rate cut in the immediate near term specifying the time frame that maybe for the next 3 to 4 months is ruled out, looking at the high inflation, looking at the high employment number coming month after month. In such a scenario, the sustainability of the Dow is under question mark, and the belief that markets typically globally follow a cue from the Dow. If Dow does go down, there is no reason why Indian markets may not respond in a similar way, not exactly mirroring the image, but taking a cue and coming off. So they are betting that the Dow comes off. Because of Dow coming off, there could be a entry level which is far lower than today's level. And I believe the biggest negative priced into our markets currently is the fatigue factor. Post 4th of June, when the results are out, there would be a reaction to the results, let me put it, depending on the number that the ruling dispensation gets. There could be a euphoria followed by a correction. There could be an uptick followed by a correction, but that correction is imminent. So I believe they are trying to time that correction part, that when everybody is part of the correction, they are able to pick up what they like at best prices according to them. What they like at best prices according to them.
Okay. Arunji, before we let you go, this is also an opportunity for a lot of our viewers to learn from your wisdom. If I were to press you, one large cap pick for 2024 and one mid cap that you like, apart from Jana SFB, and of course Park Hotels. I would presume they are small caps even by your definition. So one large cap and one mid cap which you believe are undervalued and you think there is value to be had, sir.
So one large cap, I would stick my neck out and give you a choice from the banking space. We have 4, 5, 6 banks. Pick your choice. If you want to go with a PSU bank, take SBI. If you want to go with the private banks, you can choose between ICICI Bank, you can choose between Axis Bank, or even an HDFC Bank, considering that it has been at the receiving end over the last 6 months. In the mid cap, small cap space, I would put my bets on a small company from Calcutta, which is into the railway space, Jupiter Wagons Limited. It appears on your screen as JWL. I believe this company, it has risen well over the last 12 months, but at around 400, you are sitting uh, on a stock which could give you, even from here, 50% return in the coming 12 months, if not more.
Wonderful. I think there is some kind of a telepathic connection between you and Mr. Lokpriya. He also mentioned Jupiter Wagons in his earlier comments, and with that word of caution that it had run up fairly sharply. But given the, how should I say, the very circumspect nature that you have in picking stocks, this is a word of, how should I say, good stock picking, that even Jupiter Wagons from now on. And of course, there is a crisis of plenty, any large private sector bank or SBI. Thank you, Arunji. What a lovely conversation we had. And now I hope you will be regular on Market Today, and we'll get to learn not only from your wisdom, but also from the wonderful stock picking that you have. Thank you, sir.
Thank you. Thank you.
Okay, ladies and gentlemen, let's now look at the market. We are at 9:51, about 5-7 minutes left to wrap this show. So, selling pressure coming in. The high, which was 22,530, has not been taken out by the Nifty, and it's dipped about 70-80 points from the intraday high. At the moment, trying to gain back 22,450 from the bears. Strong moves are coming into a lot of stocks within the banking space. Let's look at how markets are moving in terms of the advanced decline ratios. So far, it was a fairly strong first session, which the bulls took it in their way. But so far, you've seen now weakness creeping in. The Nifty Bank is still 0.5% higher, 48,445. Remember, the intraday high was about 100 points above at 48,550. What are the stocks that have pulled back? The Nifty Auto Index is down 0.33%. The IT Index is now in the red, 33,623. The FMCG Index is down 0.2%. The NSE 500 is now showing signs of a bit of a fatigue. Still 290 stocks in the green, compared with 208 in the red. What's moving the markets in terms of new highs? Let's pay attention to them. Of course, Lemon Tree now 149.60, 3.5% higher. This is a fresh record high. You have Blue Star 1471, 1.2% higher. Jindal Saw 1.7% higher, almost 569. Concord Bio 1656, mildly in the red, but a fresh record high. Trent running ahead of its earnings now, 4320, 1/3% higher. Let's look at volume buzzers, something that I haven't touched upon today. Let's look at volume buzzers within the Nifty first. I would imagine, okay, Apollo Hospitals is in pain. 7.14,000 shares have been traded. 7,14,000 shares have been traded. The counter's down 8%, and this is the 2 times 5-day average. HCL Tech post earnings has been a disappointment. Almost 100% of its 5-day average volume has been traded in the first 45 minutes of trade. 37.41 lakhs. SBI enjoying its earnings. 2% higher, 1446. Almost 86% of 5-day average is traded at about 10.9 lakh shares. This is what is the volume burst in NSE 50. How about NSE 500? BSE, a bit of a disaster happening there, 15% lower still, 2,703, 36 lakh shares, which is 2.77 times its 5-day average. Supreme Industries, this is not something we track often since the price ticket is very high, 46.75, 7.7% higher, and 4x volumes. This, ladies and gentlemen, is the broader structure of the market on Monday morning. Remember, we have a truncated week ahead. Wednesday is a holiday because of Maharashtra Day, which is also the 1st of May. 29th and 30th of April will see a lot of mutual funds coming into action to see their NAVs bump up. We are also moving into the auto numbers. They will start coming in tomorrow because May 1st is a holiday, which is Wednesday. So keep that in mind. And of course, it's the BankX on the BSE and the Nifty Select Mid Cap, which is showing its weekly expiry today. That, ladies and gentlemen, is the wrap on market today as of now. Remain tuned into Business Today Television. There is a series of managements joining us during the day to discuss their fourth quarter earnings, and that is something that you need to listen to understand the future trajectory of the market. We leave the Nifty at 22,464, 44 points higher. We leave the Bank Nifty at 48,432, 225 points higher. A mild red tick on the Nifty IT index and a fairly strong sentiment on the Wall Street. Remain glued to Business Today Television, ladies and gentlemen. Thank you for watching us.
Hello and welcome to Easynomics. I'm Siddharth Zarabi and you're watching Business Today Television. The world's largest election exercise is well and truly underway. 2 phases done, and the results of a multi-phase election will be known on the 4th of June. And at that point of time, we will really get to know how India has voted in this round of parliamentary Lok Sabha elections. But the guest on the show today has written a very thought-provoking book, How Does India Vote? And Dr. Surjit